to Nestology. We are your hosts. I'm Jessica.
And I'm Shelley.
And today we have a special guest. We have Courtney McManis with Farmers. And she is
Farmers what?
Insurance. Sorry. You should have introduced her then. Since you know better.
I like farmers markets, so I'm just clarifying.
Farmersonly.com.
There you go. There you go.
Sorry. Farmers Insurance. So we did have an episode over a year ago, I think, where we did talk about insurance, but this is a very changing, evolving area, and there has been some big things that have come up in that time frame. So we wanted to bring Courtney on to help answer some questions and kind of guide us through what's happening in the wild world of insurance.
I know, homeowners insurance. Let me just tell you, I know it's not a fun topic for most people, right? I know mine personally doubled. Yeah. And I know claims. You're just like, how in the world, Courtney, how is this happening? Please explain it to us.
Well, welcome. Let us start interrogating you.
No, please tell us about yourself.
Yes. Yeah. Well, thanks for having me on. I appreciate you guys. Love getting to know you guys. I've been doing this for about 21 years. Love what I do. I started in college at Texas Tech with a degree in financial planning, which is really kind of what sparked me into the insurance world. I knew I wanted to help people, whether through finances, with their assets, things like that. And one of their biggest assets they own is their home. Mm-hmm. And I did an internship with State Farm back in the day in college and fell in love with it. And I thought, what other industry could give me the ability to grow my own business? And similar to the oil and gas industry, that residual type income and having that freedom of flexibility for time with my family was really important. So jumped right in, opened up my first agency at 24 with State Farm, and spent 13 years with that company from college on. And then right after I had my daughter, decided I wanted to truly own my own business. At State Farm, you don't really own it. You don't have family rights to give it to your daughter or something like that, and sell your book of business. And you have that ability with Farmers, and their product that they have for homeowners specifically is what really sold me on it. So I moved over and I started up my agency with Farmers. And now we are honestly, we have the ability to not just sell through Farmers. We have the ability to quote people with outside carriers if it's a better fit for them. So it's kind of a hybrid in between being an independent broker and still having the backing of a very large, stable company that we know is going to be there if a huge disaster happens, such as a hurricane or anything like that. And in this crazy state of Texas, where we have everything from hurricanes to tornadoes to flooding, unfortunately, to hail all around this area.
We got it all.
We've got it all. That became really, really important.
That is amazing. Okay.
Well, good for you. That's amazing. Have you regretted that at all over the last couple of years?
I have seen so many people. I was a part of a program that tried to bring people in to learn in agencies to become their own agent one day, the agent aspirant program with State Farm, and then over here at Farmers. And that became challenging because selling something on where things ebb and flow, things get better. But like both of in real estate and loans, that is also very similar. Things go up and down. We have had 36 months of up in rates and claims and all sorts of stuff. And so that's made it very, very challenging. And so you've seen a lot of people exit the industry. So both of you have as well.
Absolutely.
And I think the ones that have seen it and have faith in it and believe in it and have built a great book and have a great client base and a great community outreach program, that is what has truly helped getting through this last 36 months. And then also making changes that you need to make. And so many people do not do that, I think.
That's true. That's true. I know this last 36 months, we all know it's been super challenging.
We went crazy high, busy with business when the rates were low.
2020, 2021.
Yeah. And our coach, she texted me yesterday asking how I was doing. And I was like, well, right now I'm positive, but I was like, I know that it's shaping me to be better because having these extreme experiences, for those of us that survive it, we're going to be better for it, but it is really hard to get through.
Oh, no, you're right. We absolutely are the survivors. I know that at least on the mortgage side of things, it's like there's only 1/4 of us left from 3 years ago.
Crazy.
1/4. So I'm like, we are all survivors on this call.
We are.
Congratulations, ladies.
Congrats, ladies.
We're still here.
We're still here. We're still going.
Yes. We're dedicated.
Yeah.
Very dedicated.
Yeah.
So getting into the insurance,
Mhm.
what has caused the rates to continue? Because we heard last year, like they think they're plateauing. Did things like the LA fires have these impacted, and are we going to keep seeing the rates go up from here?
So everything is state-based. So for our insurance company, things are based on the state. So
Okay.
again, we have it all here in Texas.
Texas.
If you look at
Mm-hmm.
California, they did some crazy things with insurance. I know, for example, as a farmer's agent in California, and I don't know if this has changed since then, so I hope I'm not speaking out of turn, but for quite some time, once after the fires happened, they had an allotment of policies that they could sell. So if
Mm.
you're an agent, such as myself, and you have a team of producers, you can only sell so many homeowners policies and once for all of the agents for the whole state. And so if you have a mega agency with 100 agents in them, they're going to outproduce the agent that has one person, and the allotment for that entire state is up within a week. And then you cannot
Wow.
produce anything for the rest of that month. And that's a huge, obviously, income loss for the agency side. And it just brings the ratings have just been crazy. As a consumer myself, as a consumer for both of you two, you have seen
Hmm.
the rates skyrocket.
Oh yeah.
So for
Oh,
our,
definitely.
yeah, for our specific state, I mean, it's all of the claims, it's a pooling of insurance risk for the state, and it's been brutal. So insurance companies, especially some of your larger ones, are having to get creative with certain discounts, like us having the new home buyer discount. If you purchase a home within the first 12 months, you get a discount for your home policy. Certain coverages, deductibles going up, right? We've all seen
Oh
that.
yeah.
Oh, for
Now,
One and a half,
now
sure.
standards,
2%.
yes. Now standards are 1.5%, 2%. We have, carriers that are wanting higher deductibles. One of the beautiful things about deductibles, while I'm on that topic, is we now have the ability, we have a carrier that does basically, it's called a deductible buyback plan. So for
Okay.
any of the consumers out there that these deductibles are raising up and they're requiring 2% deductible, 1.5%, 3%. I heard one company was crazy offering, requiring a 5%.
Oh my gosh.
Some of it is also
Wow.
based on the value of your home, but we
Hmm.
have the ability now to say, okay, feel comfortable taking that 2 or 3% deductible. Let's drive that rate down on your home insurance policy. And let's go over here. And for $500, $700, $800 a year, you can buy back that deductible down. And in an example of using a $600,000 house, I believe that it was around $600, $700 a year, you could buy $3,000 your deductible back down. So there are options out there that insurance companies and the state are working together trying to get creative to
Yeah.
help the consumer because it's just been outrageous. It really has.
It really has been. Because in Texas, like we have it all. People don't think of that. They don't think of Texas and hurricanes,
Yeah.
right? I guess they just
Not up here.
forget. We've got
Yeah.
Well, except for if you have a condo on the
If you're
coast.
down in, yeah. If you're
yes.
down in
I have a,
Galveston.
yes, I have a condo down in Port A, and so yeah, anytime there's
Well,
a hurricane, like then I'm stressed and
Yeah.
Yes.
not sleeping. So
Yeah,
I
I
know.
bet. I bet.
We
It's terrifying.
we got it all. So yeah, so even though like, I haven't had any claims, for example, on my house, I'm thinking, oh, I'm cool. But it's like, no, it's kind of a collective.
It is a
And I got
collective.
to pay for everybody else's damage.
I know. I know. And that's how the typical consumer would think of it. And that's absolutely right. And it's challenging. If you think about the little bubble here, I'm going to use the zip code of 76226 as an example. Okay. We're going to use
Okay.
it as an example. That has been starting about 36 months ago, was the very first one to jump up in price on premium, astronomical. I mean, we are ranging in quotes and there's no rhyme or reason. Everybody's insurance score, which is a big factor of it. It's not a credit score. It is an insurance score, but all of each individual person comes into play. So I could be quoting one home and down, and it's 3,000 in premium a year. I could quote another one and it's 8,000 in premium right down the street.
Oh,
So there are
okay.
so many different factors, thousands of factors that go into rating, and what these actuaries do in the background, I have no idea. I feel like sometimes they have a dial and they're like, yeah, we want to write some business today, so let's turn it down. We want to write some more, let's turn it up. And I know that's not the case, but it sure feels like it. My
it feels
goodness.
like yeah.
Yeah.
And so an intro, I mean, you've mentioned this. So like if you have, two people in the household, right, and they have this
Mhm.
insurance score, do you use the better person, so to speak,
Yeah.
like the better score, I should say, not the better person, but
So
I'm
yeah,
like,
totally. Great question. And that was something very interesting for me transitioning from my original company over to this one. It wasn't the ability to see who had a better score. And then we had the ability to do that. So we would run a quote and the wife's name, and then we would run a quote and the husband's name. Let's say if it's a husband-wife situation, and then see who has the better score. And it doesn't necessarily mean accidents or claims filing. There's so many things that go into it. But really now it's pretty much you put the household in, and collectively as a household, this is the score that you're given. So it hasn't
oh,
really changed
okay.
much in the last couple of years. I think that's one of the changes that these people in the background, that are doing that and in charge of that, they've pretty much made it to where if I run using a husband and wife situation, a husband first and then a wife, their scores are pretty much going to match, and the price is going to be about the same.
Wow. So am I screwed because I'm single?
No, no, but I will say one of the unfair things is you do
What?
get a little bit of a price decrease for being married. And I don't think that that's fair. I think that they should
Rude.
take that away.
So you're
I
just gonna have to
so
find a
rude.
husband now.
Rude.
Just find a
Throw
husband to
someone
get
on
an
that
insurance with.
policy.
Oh my gosh. Wow.
We could find you a man now.
Okay. No,
Yeah.
thank you. No, thank you.
So with insurance policies, one thing that I have seen, not pertaining to a sale, but someone who is in their existing home and decides to change to a different, everybody's shopping around right now, so then they switch providers. I've heard this happen a few times where the new policy's in place, and then a month later they get a letter saying your roof is uninsurable. We're canceling or making your deductible some outrageous $20,000 on a $400,000 house. So I've been suggesting to people before you switch, get the roof checked, but is there anything else that they could be doing or something that they should be aware of?
So yes, that has been an issue. And so for clients of mine that have gone into the renewal phase and we're switching them from a carrier to a carrier, let's say, it is really important that they take a look at that roof, because most insurance companies, especially now, it used to be a hit or miss, case by case, randomly somebody might come out and drive by to check out that house. Now there's more of that going on, and they're really wanting to look at roofs, especially in North Texas, especially in the 5 major counties of North Texas. And they are really, hyping down on that, including trees over roofs. They don't want any tree branches over a roof. They don't want, if that roof looks like it's old, they're going to deny you. And now you're stuck without insurance. And let's say you just closed on your home. These are really important things that we have to stay in front of and educate the consumer on, because sometimes it's not in our hands. Like if a client of mine who I've educated and I've worked with for years decides to leave me for, let's say, price, totally happens, and I'm not the best fit for everybody, and then they leave to somewhere else, but their roof they hadn't had fixed since 2017, since our last really bad hailstorm, March 26, 2017, and now they're in an actual cash value situation with their roof. So that's something to look at. So before, I think about 24 months ago is when the change happened. Don't quote me on that, but I think around that, we went from 12 years a roof could be where we could continue to give full replacement cost on that roof before it goes to a depreciation and actual cash value, where now it's 8 years. So now they have bumped it down. And when you think about it, I mean, we don't really go, especially in some certain areas. They're using that as an example, I feel like, because 76226, using that as the example again, that's tough. We have hail every 3-4 years. So you're not going to make it to that 8-year mark anyway. But making sure before you make a new purchase, make a new purchase with a new insurance policy, that you're checking those types of things and you're talking to the new carrier. I know sometimes you're like, I don't want to give them too much information, but that information could be really valuable in blocking you from being set up in a really bad situation where they cancel you. And usually that's within 30 days notice.
Yeah. Oh, absolutely.
And so I haven't had as much issue on like a new purchase because we do inspections and negotiate repairs and stuff.
Sure.
But there was one we were butting heads on because it was old. It was a very old roof, and my roofer came out and said it's not insurable. It would not be insurable, but it did not have hail damage. The seller wanted us to write it as he would only replace it if it was approved by insurance for replacement.
Yeah, I've seen a lot of that.
But I was like, but if they deny it, but it's still not insurable for my client, but we could not, she was calling her insurance to see, because we were like, maybe we can get them out to get a statement from them that it's uninsurable. They were like, no, we won't come out till after closing. She's like, but then I won't have insurance. So that's the only one I've had where we've really struggled. But at least there's inspections, and if you are in your home and you don't realize you have roof damage and you change policies. So in that situation, do you know, can the homeowner go back to the previous insurance company to try and get that covered through them?
That would have to be. So hail is interesting because it's hard to prove when this hail came from.
Yeah.
However, how it's supposed to happen is, I'm going to use that March 26, 17 date where, every single roof in the immediate area pretty much needed replaced. That situation was absolutely horrible for a lot of people. And some people chose to get it fixed then. Some people chose to wait, which is something we can also discuss. So a lot of times in situations like that, when somebody goes to buy a home and they go to move in, and let's say that now their new insurance company comes out and finds hail damage, they're going to go back. They're going to need to go back to the seller's insurance company to get that filed. It goes based on when the claim happened. So let's say, and you have 1 year to file a claim. So that a storm that happened
from the event. Okay.
Yes,
1 year from
the event.
Okay.
Yep. 1 year event, 1 year from the time that the claim happened to file the claim. And then you have 1 year from then to do the repairs. So if you get stuck in a situation that somebody's like, okay, I'm going to wait this out and then try to sell my home, and then somebody purchases that home, and from the outside, surely inspectors, I'm not a real estate expert. I don't dabble in that at all, but surely the inspectors would find it if it was severe damage. But it's hard at the end of the day to prove that this hail damage happened then. So if the sale goes through and you have a client moving in and everything goes smoothly with their current insurance company, and let's say another hailstorm hits, is probably when that person's going to have another roofer or inspector come out. At that point, it's hard to determine, did that happen from the previous owner or is that from the hailstorm? So they would be able to file under their current insurance company.
One example, it was a neighbor of mine. He called me panicked because he was like, I just got it canceled. They've been in their house for years. He just switched. And so insurance A has already been out. They're no longer with them. Insurance B, they're a month in and they say, we've canceled your policy. Your deductible's now $25,000, whatever it was.
Gosh,
and your roof is uninsurable. So I told him, I was like, go back to your previous insurance company. I don't know that they can do anything, but that obviously happened on their watch because we didn't have a storm over the last 30 days that would have caused it. It would have been prior to that, but I don't know if they're gonna be like, hey, you're not our client anymore. So we're not doing anything. Can they fight to get?
Yes.
Or they're going to be out of luck.
They're going to, unfortunately, most likely be out of luck. And again, it goes back to also that 1 year of being able to file a claim from the date of the incident that happened. I don't know as far as legality, what could happen as far as from somebody, not fixing the roof when they should have, because here's another thing that unfortunately happens. Insurance fraud is real and it exists. And sometimes insurance companies, when you file a claim, they're going to hold back that depreciation check. And so once that roof is completely finished, or everything is finished within the house, of course, now everything has got damaged, the screens, the patio furniture, the gutters, the metal components on top of the roof, everything. So once everything is finished, then that depreciation check gets cut. There have been times where people have not done the replacements and have taken that initial check and then go to try to file another claim and they're denied because they didn't get the repairs done. And that's obviously a no-no, big no-no.
Oh my goodness.
We try to, well, at least I do, whenever we're looking at houses and gauging from what they put on their seller's disclosure, because it does ask on the seller's disclosure, have you filed a claim? And then have you filed a claim and not used the money to complete the repairs? Now, if they've already committed fraud, they may continue on and
they're going to continue
going. So they're going to say no. But I've had situations where they're like, oh yeah, the roof is 3 years old. And then the roofer gets up there. They're like, no way in hell, this roof is only 3 years old. So yeah, there are people out there that lie.
There are people out there that lie. One of the other
What?
things while we're talking, I know, what the heck?
What? I have never been lied to.
No, never. One of the common ones we're seeing lately is crazy. So it has to do with the metal components on roofs.
Yeah.
And you wouldn't think that that was such an important thing. When I came over to Farmers, I had no idea there was a coverage that existed for what is called the mar metal. So marring through the metal components, meaning gutters, your dryer ventilations on top of the roof. That is a coverage that's actually excluded with many companies. So if it is just dinged up by hail, but still in working condition, that is not something that is covered under the traditional home insurance policy. It would have to be not in working condition to be used. There are caveats to that. Sometimes clients in the past have said, well, I didn't have that coverage before. My gutters were covered. In certain situations, when you remove the gutters from the roof, when the roof is getting replaced, occasionally when those gutters get put back on, they're not in working condition. So there is some situations where you can have that covered where you didn't have that coverage. However, that endorsement is expensive. And so sometimes you will see, as you're driving around neighborhoods, roofs that look brand new, but with some dings on their gutters. And that's because of the metal exclusion that most insurance companies have.
Oh my goodness.
Yeah.
Wow.
There's a lot of craziness that's happened the last 3 years.
Well, and then with the fraud, I see that part of it a lot where people will because I had it too. They're like, well, we'll give you credit for the gutters. We're going to give you credit because there was a couple dings to the garage door.
Yes.
There was some drywall damage. They're itemizing all those things, but I've seen people who will just replace the roof and then not do the other things. But that's already been paid for. So, I've had clients, they're like, well, yeah, they gave us money to also stain the fence, but we're just going to pocket that to cover. And I was like, the people buying the house want to see the claim. They want to see the receipts. They want to know everything was done, that got paid for.
Yes.
So, it's not always that they just don't do the roof entirely, but they pick and choose from the list.
Completely. The biggest, talking about fraud, I have a funny story. It's like, it happened a long time ago. So one of the main policies in insurance that fraud is committed on is like personal articles policies for like jewelry or items or watches or anything like that, or just anything that you have that you're wanting to insure. Back in the day, I think it was like, I don't remember, it was in the 80s or something like that. But somebody, I think it was even before that, they were building a golf course with this huge $250,000. I'm ballparking that. I have no idea how much a digger, a tractor trailer digger, whatever. A big machinery to dig holes, whatever that is called.
Okay.
Yes.
They dug their own hole, drove the tractor into the golf course that they were building, buried it, and then filed a claim for the thing saying it was stolen. And then it wasn't until about 15, 20 years later, ground eroding, ground moving and stuff like that, parts of the tractor started coming up through the ground. And they found the guy. He's like 80 something years old at this time and ended up going to jail for insurance fraud. Yeah.
Oh my gosh.
What? That's big ol', how do you even
I don't know.
that?
You know the farmers commercials? I've seen a thing or two. I know a thing or two because I've seen a thing or two.
Yes.
These claims were all real in those commercials. They're not fake. They're actual real claims that have happened. And there's some crazy stories out there. That's
people are wild.
We do. We've had some episodes where we literally just talk about crazy stories because, in this industry, right,
we
all
going
of this.
to people's houses, we're looking at finances and
It is insane. And like, you had brought up earlier, it's like, I wanted to say, when you're talking to your lender, your homeowner insurance person, your realtor, like, just tell them everything. We need to know everything. It goes so much better and smoother. Like, don't try to hide it.
No, we'll figure it out eventually.
Kept the insurance money, just tell us, because it's better than it showing up.
Not to mention,
it's like, we're here to help.
Yes. And it's hurting everybody else. It's impacting everybody else. You filing that claim and not getting it fixed. And then somebody else comes in, buys that house. And then a hailstorm comes through a year later and they file another claim. That's 2 payouts this house has had. So if you think about how expensive our premiums are, but you think about how often in a specific area, a new roof is needing replaced, and we're talking $25,000, we're talking $30,000 more, 50, 60, depending on the price and the size of the house, between the fence staining, the garage getting fixed, the drywall getting fixed, all of the things that you just mentioned. And so you take that into account and you times like, okay, this is going to happen potentially every 4 to 5 years in a specific area. If I'm paying $5,000, that's $20,000 over that 4 years, but the company's paid out $50,000, $60,000 for my home. we can only take so much of that as an insurance company, right? Before they make changes and have to do things. That being said, the premiums are outrageous, right? In certain areas. I do see it plateauing, like you said at the beginning. I do see them coming back down into reality. I'm finding in certain areas that were absolutely horribly priced. In the last couple years, the pricing is getting much better. And it is like a completely different world once we hit into 2025, at least for my company. Blessed for that. Lucky, happy to have that for sure. So hopefully that continues.
Are there any things that, and I'm sure with you, you're asking questions, and some of my clients, when they're buying a house, they're asking me, they're like, my insurance agent wants to know this or that. And some of them I've never been asked before, but I'm looking for discounts. Is there anything, I mean, obviously a new roof, if it's a brand new home or a brand new roof, that's going to help them on their rates. Is there anything else like fire suppression system or
alarm systems? Like you mentioned discounts earlier. So like, what are ways that people could get potentially like discounts?
There are so many discounts, and stack as many as you can. One of my favorite ones that is unique that I always go to first when anybody asks me about getting quotes or insurance is, what do you do for a living? Ooh. If you have a spouse, what do they do for a living? And do you have a college degree? And if so, what is it in? Those are discounts that Farmers offers specifically that I thought was really unique. I have never seen another carrier besides USAA for military reasons. And we give the same military discount. I think actually our discount might be a little bit more, which is awesome.
Oh,
don't quote me on that. But we have really good discounts for certain professions and college degrees. So if you have a degree in accounting, for example, randomly, that counts as a discount. I wish that like, a degree in everything could count, but like scientists. So if you have a bachelor's of science in certain things, that can count. Doctors, police officers, firefighters, pilots, teachers is a big one. Besides outside of the military, the standard military. So that is one that is really big and really heavily missed.
I have never heard that.
I haven't either. I mean, I can see some of them I'm kind of questioning, but like I have a friend that's a firefighter who will not ever use their fireplace because they've seen so much. So I mean, their risk of a fire in the house is decreased because they have knowledge. But I am trying to figure out the accounting. So
the accounting, I know, right?
What are
accounting like? But I have a finance degree. Isn't that similar?
I know. So isn't that crazy? So mine's financial planning, and you would think finance. Because I have a Bachelor of Science in financial planning, it's not a business degree. Mine actually counts for could potentially count as a discount, whereas just a regular finance degree in the business for a business degree does not count. There's so many different things that
So I really want to know their thinking behind something.
That's okay. Well, but when, really, we all know, right? Life is expensive right now and everything has gone up. And it's like, we're all about like, okay, how can we do this better, cheaper?
Yes. Bundling.
Okay.
Bundling,
okay. So bundling.
Bundling your insurance, you're going to get the biggest discount through that. And
like cars with the home kind of thing.
Yeah, cars, home, and actually life insurance. That's a heavily missed one. That, believe it or not, the discount that you get on your home and auto insurance can pay for that life insurance policy. So if you only have life insurance through work, which I highly recommend to not just have life insurance through work, but that policy can pretty much be free. If you get a policy, let's say on a child for a future college savings plan for them, that you pull that money out tax free, right? That discount that you're getting on your home and auto, heavily missed, makes that policy free. So that makes educating your clients from that front end very important. Where a challenge becomes is obviously when they're a first-time home buyer or a new home buyer and all the things are getting thrown at you, right? Like all the paperwork, all the things, and it's a lot. We don't ever want to like overwhelm anybody with like, here's the 100 products that I can offer you and stack discounts for you. But besides that, if you have toys, if you have jet skis, if you have a boat, an RV, all of those things are stackable discounts. So take advantage of that. That is something really, really important that people a lot of times don't, that may have it with another company because they thought they're specialized in boats. Well, we do that too. You have everything together. Now your discounts are going up, 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 and up. And there's there's so many discounts between, home and auto that people can qualify for that are important, including an early shopper's discount. So if somebody comes to me and needs insurance today, if I write them a policy, they will not get a discount. But if I can place their policy 5 days out with an effective date from when I quoted them, they get something called an early shopper's discount. So there's so many
Oh my
different things.
gosh,
Yeah.
so many discounts. I
Yeah.
love that.
Yeah.
Well, I know we had a mutual client together, Courtney, and
Yes.
I've worked with you, and you are absolutely
Yes.
amazing. Like
Thank
you totally
you.
are, in jive with how I operate, service and
Appreciate that.
speed and fun and friendly and educational. And so I always strive to surround myself by people with people
Yes.
like that, right? And
Likewise.
so
Likewise.
I know you did a fabulous job. I can say that personally from,
Thank
working with you
you.
on the mortgage side of things with the
Yes.
mutual client. So
Thank you. I
I
appreciate
know
that.
you go through all these things, but I've learned like so many things, but I also had like, I've got a random question because I'm
Yeah.
thinking through, yeah, I know me with my random
Do.
questions, go figure. But, because I've had situations, right, that have come up where somebody couldn't buy a house because there was a branch, hanging over
Oh,
the
yeah.
tree. I mean, over the house,
Yeah.
and the seller refused to cut it down. And so
Yeah.
I
That
know
one was
you remember,
wild.
like
She kept calling me
I was like,
and she's like,
what
this
the hell?
branch.
Yeah.
Like, I'll go chop it down.
Yeah, let me do it. I have
You
offered that. I was like,
know,
I will go. I don't know if it's a liability issue, but I have a really good umbrella policy, so I think we should be
right?
good. But like, let me go. Let me
I
go
was
chop
about to
that
go out
tree
there, but I
down.
was like, I could not understand why the seller wouldn't,
Yeah.
cut. Anyway, because they couldn't buy the house,
Yeah.
right? Because you can't have insurance without the roof being
Nope.
insured, right? You
No.
can't just exclude a roof.
No.
But that was like over the
Yeah.
whole house. So branches you mentioned earlier are kind
It's
of an issue.
crazy. Yeah.
I also had a situation where a gentleman had two pit bulls
Oh, yeah.
and he couldn't buy the house
Yeah.
because the insurance company wouldn't insure him. Or
Yeah.
I don't know if it was going to be double or triple the cost. Maybe you can elaborate on this dog thing, but I was floored because I was like, okay, wait, you're telling me you can't buy the house because of the insurance because of your dogs.
Yeah.
Like he
And that is,
terminated the contract.
yes, they can, and they will, unfortunately. They look at everything, and don't forget, like the people that are back there, these actuaries sitting there figuring out the proper rating. They're looking at who, so that's why, for example, I'm going to use this as teenage drivers are more expensive than an adult driver because
Mhm.
they're more likely to get into an accident and file a claim.
Hmm.
Unfortunately, and I love all dogs, and that makes me really
Yeah.
sad
I
because
know, I
I
know,
would
me
have
too.
like I would have a pit bull, no problem. Like, I love Dobies, like, but
Yeah.
there are certain restrictions on that, and that is a question
Mhm.
on the insurance policies. And I have seen where people have, in certain situations, been canceled for that. They
Wow.
say you're more at risk for something, they're going to charge you a premium
Yeah.
or, allow you this policy if there's certain guidelines being met, unfortunately. It
So it's
protects us too as consumers.
Oh, absolutely. So I don't know. So pit bulls, for example, it would just be more expensive, or is there like a hard no on
There are
certain
different
breeds?
carriers for all of that. So
Okay,
yeah,
okay,
it
okay,
is.
gotcha.
It's one of those things. It's one of those like I don't mean to be like, it's it's hard to answer it. It
I
is
get
so
that.
on the agency side is unique because we are not claims trained. We are not trained to say this is covered or not covered. And that protects us on the agency side because there's been so many lawsuits where
Mhm.
insurance agents have said, yes, this is covered, because our understanding on the policy is like the consumer, we're writing the correct coverages, we're putting all the correct things in there, and then it goes to claims, and the customer may have been a little confused on the situation, right? And I then
Hmm.
answered it, yes, of course I would be something covered. I see your coverage right here on your policy for that. And as they dig into the weeds, when claims comes out, it's a different story. So that is one of the things too that I have learned, even 21 years in this industry. The last 3 years have really taught me to go back, learn more things, be careful with what I say, make sure I'm educating my clients best I can. But the overall
Hmm.
answer for claims is that we are not claims trained. That would have to be an answer for a claims department on whether or not something would be covered or not covered. Unfortunately, or an underwriter in a situation of writing a new policy, whether or not that policy would be accepted or not.
I get
Wow.
it. I get it.
I had never even thought about that with pets with that liability. I mean,
Yeah.
we've talked about liability in the house, like if you have somebody who gets hurt, but I had never thought about my pet being a potential thing that made my insurance more expensive or denied
Yeah.
altogether. I mean, I'm like you, like that breaks my heart for
I
certain dogs because
know.
there are some
I
pit
know.
bulls that are super
So
sweet and
sweet.
great. But we
Absolutely.
had a neighbor on our street who had a pit bull
Mhm.
taking it from the car to the house without a leash. and it got loose and attacked another neighbor and her
Oh
dog, killed the
gosh.
dog, and she was in the hospital getting stitches on her leg.
Oh my goodness.
And so, I mean, they could have sued them, and
They
it was a
absolutely
rental
could have.
too, so they could have sued the landlord
The
because it
Oh my
landlord.
happened
goodness.
on their with their property. So, I mean, that's gosh, I had never even
It
thought about that, but I
that
mean, it makes
absolutely can.
sense.
Yeah, it absolutely can. And I've seen it. And I actually am going through a situation with a client of mine as well. Similar situation. They are the landlords of a home. Something happened. They're coming back. They can come back after the tenants. They can come back after the owners of the house.
Mhm.
There's a lot of things that go into it. So talking about not just dogs and making sure that your dog is on a leash, you're taking, proper precautions.
Hmm.
We live in a sue happy country. We
We
do.
do.
We
People
so
sue
do.
everybody. And so
Oh
Yep.
my goodness.
number one plug here, get an umbrella policy. They are
Yep.
super inexpensive.
Yes.
I
They
have
are
one.
so
Yes.
inexpensive. And you get
Yes.
starting at $1 million, stacks on top of the liability for your home. So if you have, let's say, 500,000 or $1 million of liability on your home, you get to stack another million on top of it. So in horrible situations where you have a pool and somebody drowns in your pool, it
Mhm.
happens.
Oh,
It happens.
It
yeah.
does.
We've seen it on social media just recently. It happens, and that's why you have that protection. And that's what
So
helps.
what is that? Okay, so just so for our
Yeah.
listeners, right?
Yeah.
It's like, we're all used to this certain lingo and stuff
Yeah.
in the industry, but when you say get an umbrella policy,
Yeah.
what exactly does that mean?
Okay, so think of an umbrella, how it protects you from the rain. So you're holding an
Hmm.
umbrella over your head and it's protecting you from the rain. Myself, the asset. An umbrella policy is just that. It's going to go over all of your assets and protect them in a situation if somebody sues you or comes after you. So,
Okay.
and it's honestly, you have to be another honesty tip to make sure you're telling your insurance agent is don't try to just get the cheaper umbrella policy and say, I only have a home and two cars and leave out the fact that you have a boat, a jet ski, an RV, another
Oh
home
my goodness.
somewhere. You've got to include that. So if you want your umbrella policy to actually work, you need to
Hmm.
include all your assets under that. And that's where the pricing is based on. It's how much assets we are covering under that umbrella to protect you. And it's a stackable coverage, like I said. So it's liability. So if somebody comes after you, there was a situation, it's another funny story. It wasn't a client of mine. This was before I got into the industry, and it was made the news. Somebody trying to break into a house was trying to climb through a skylight.
Oh, yes, I've
Fell
seen
through the
that.
skylight. Yep, fell through the skylight because the skylight wasn't properly installed or something happened. The guy falls through, sues the homeowner, and wins. So there are
What?
crazy
Somebody
Yes.
breaking
situations.
into the house
Yes,
sued the
yep.
homeowner?
Sue the
Yep. For a
homeowner
faulty
for
skylight.
a faulty setup, or a person in a bar, let's say a restaurant owner, business insurance, another discount. If you own a business, stack that discount on there. But if you're a patron at a bar and you're sitting there drinking, and the restaurant owner can do everything in their power to say, okay, you know what, this person's a little intoxicated, I'm going to cut them off. I'm also going to get them an Uber to go home. This was I think it happened in Houston, and I don't know what year this was. Guy went home, beat and killed his wife, came back, sued the restaurant,
Oh
and
my God.
there are
Stop
crazy
it.
I
for
have
over-serving.
goosebumps. Seriously, right now, they're like, this is ridiculous.
Liquor liability. If you're a restaurant owner, liquor liability, number one thing. Make sure you have it.
Like you said,
Wow.
we're in such a sue happy, and I hate
Yeah.
that we have to think
Yeah.
about this. But like, there was some neighborhood kids, and most of the kids that my kids play with, like, I know the parents and everything, but there's some that parents never come outside. These kids are always coming over to our house. We've never met the parents; they don't ever come out. But their youngest is like climbing around in our garage, grabbing
Yeah.
things, doing crazy stunts, trying to jump off things, and I'm like. He's going to get hurt. And
Yep.
I don't know these people. They will sue me because their kid
Yep.
broke his leg. And
Yep.
I have kicked him out of I'm like, I'm sorry, you guys have to go play out in the field across the street
Yes.
because you're not going to be in my garage. I'm so worried about getting sued because he's doing stupid shit.
You have a valid
Yeah.
concern, and that happens all day long. Back in the day, my mom made my friends sign a waiver before they got on my trampoline.
Oh my gosh, are you serious?
I'm so
To get on your
mortified.
trampoline?
Yes, to get on my trampoline. I was like, Mom, Dad, really? This is mortifying. And they're like, you know what? I don't know if it'll stand in court, but it protects us a little bit and it's a protection piece. I'm going to have them sign if they're going to be on my property doing something that is risky, riding on somebody's boat, doing something like that. Be careful with
Yeah.
stuff like that. People, they act like they may be your friends, and they may be, but at the end of the day, if it becomes a serious situation, they may not be your friends and they may sue you. It's
Yeah.
crazy.
And we have a client that they're wealthy. They have a lot of money and assets, and they were buying a house there was a pond between like four houses,
Oh.
and they found out that even though there's access, like where anyone off the sidewalk can go down to the pond. So anyone in the neighborhood, the pond, the water is actually owned by those 4 houses. He's like, I would, and I wasn't helping them on this deal. This was outside of my area, but he called me and he's like, that scares me. And I was like, that shit scares me too.
That would scare me too.
He was so worried about liability with it. And unfortunately, the agent he was working with, the homeowners, nobody was like, they all thought he was crazy for asking. The homeowners who were currently living there, they were like, oh, we've never thought about that. If a kid comes down off the sidewalk and goes and falls in and drowns, you actually own the water.
Yep.
So
and they can sue you in all 4 houses.
Yep. So he was like, am I crazy? I was like, well, I guess I'm a worrier, but I was like, yeah, that sounds wild to me. I would not be comfortable with
wild.
that.
That is wild.
He was like, this house is like a 20-year-old house. There's been people living in this house for many years, and it was never thought of as an issue.
Crazy. So, that's crazy. And there's so many stories and things like that. And it's one of those situations like it's never going to happen to me, until it does. So that's, and that's why, as much as I'm, the insurance we're hated on, right? Because you pay all this money in this insurance premium, and then you hope you never have to use it. And the minute you do, your insurance rates go up. Like, what the heck? I'm paying all this money. And but there's situations like that it may not be you today, but it could be you in 10 years. And this is one of your largest assets that you have put so much money into to make sure that you have proper coverage for it.
Absolutely. Yep. Courtney, you're not the only one that's hated. People blame rates on me. When I'm like, this is what your rate would be, and this is what the payment would be. They're like, what? I don't like that at all.
Yeah, like, well,
and then I also am the one that has to estimate insurance up front, right? It's I'm like, well, I'm going to hopefully be overestimating this, but you get to pick your policy. Good luck.
Yes, overestimate. It's always a good
I try.
So, why can't you guys just like both fix like the pricing, the housing market?
We're working on it.
Like, come on, guys.
I'm talking to the Fed about that. So
thanks.
Apparently I haven't had much effect. Yet.
Usually we follow y'all's industry. So, I like to see movement and things start getting better. And we're kind of soon to follow that. So
right.
Up and
exactly.
Up. I see really good things in our future, ladies.
I sure hope so. We're just talking about that. We're at record high inventory levels. Which
25-year high is what you told me.
So we have the most inventory and the least amount of buyers I think they were abducted by aliens. Buyers all just disappeared.
I believe that.
But it's such a buyer's market. And that's what I told her. It's like, we're in a really strong buyer's market. She's like, but where are the buyers?
Where are the buyers? Like, this is
guys.
Great news, but they don't want to come out and play because rates are so high. And
what's going to happen when the Fed supposedly does their 2 rate drops later this year? Rates drop. They're all going to come out, and then they're going to be bidding on these houses. And right now I'm like, I can get you $20,000 in closing costs.
Right.
I
can buy your rate down with that money.
We can buy down your interest rate, cover all your closing costs. I'm going to get you the house at a lower price. They're going to do all the repairs that you want.
Yep.
But no,
and then
we're going to wait. Refinance later. But they're like, we're going to wait. We're going to wait for it to go down 0.5%.
Why?
And then pay $10,000 over or more once it gets crazy. I'm like, do not remember the days where people were bidding $100,000 over and offering. I mean, I was offered as the agent vacations, paid vacations. My sellers were offered paid vacations. I've been offered Pelotons, and I mean, all these things, wild things in these offers. I mean, it was ridiculous. I'm like, do you really want to wait for that again?
No. And not to mention the rate, like when you look at it, in my opinion, and do we remember back in the day, like way back in the day what interest rates really, truly were?
I do, because I am definitely more seasoned than you two ladies.
It is. It's some of my older clients, when I tell them like rates are a little higher right now, probably expect around 7%, whatever. And they're like, honey, my first house was 19%.
19%.
Thank you.
Yes.
Thank you. Yes.
I know. I remember what rates used to be, but people are just totally into, what rates were. They're stuck in 2020 and 2021. And they just are like, oh, we're going to wait for them to come back to that level. I'm like, okay, not in my lifetime, people. No. I'm sorry. That was a one-time thing.
It was.
Take advantage of the house price, the buyer's market, use the buy down. I'm not familiar with it, obviously, but then refinance.
You can buy down the interest rate if you put in. I'm very often getting the seller to pay for it. Get the seller to give $10,000 and they can buy their interest rate down by about 1%. So instead of 7, they get 6, and then they don't have to refinance in 6 months when it hits 6%.
Different kind of options. We can do a 3-2-1 buy it down 3% lower than where it is right now for the first year. There's all kinds of things, but still people are stuck. They're just like, oh my gosh, we're still really kind of sitting around right below 7% in general. And I'm like you, I can't quote exactly because there's a lot of factors involved, right?
Yeah, sure.
But it's
if you don't pay your bills, it's going to be more.
Yeah,
that's a really nice way of saying that, right? So when people complain, I'd be like, well, if you had paid your bills on time, the rate would be much lower.
Exactly. One of them being their insurance bill, which is part of the insurance score and the mortgage score, the credit rate. So yes, I mean, pay your bills, please.
Pay your bills. That really does help all the rates, people. It really does.
It really does.
So, well, Courtney, you have been a wealth of knowledge, and I personally have loved working with you, and I look forward to working with you again.
Likewise.
You and your team are amazing and fun, knowledgeable, speedy, fast, and I love it.
Yes.
Well, we love what we do, and we're here to help in transactions in the most stressful time a lot of times in people's lives is that home buying process. And we are here to help to make it an easy transition, to make it a smooth transition for them and help them welcome them into one of the most fabulous purchases of their life as well.
Yeah,
absolutely. No, thank you. Thank you for that. Because I know personally with like refinances, sometimes the closing date is a moving target, right? Yeah. And so sometimes the insurance company gets a little persnickety with us. We're like, well, it changes for a variety of reasons, right? We have to estimate it up front. And then somebody's like, well, my work schedule is this. I can't close that day. And then it's got to be this, right? So there's so many reasons why it can
always
change.
Push out. We can't bring it back in. We can always push the dates out, but we can't bring it back in.
There you go. But sometimes we get a little pushback. They're like, that's going to take me like a week to get that redone. And I'm like, I don't understand that. I'm not in insurance, but they get a little persnickety sometimes. And you are not like that at all. You're like, no problem. No problem.
Yep. I'm on it. We're on it. My team and I are on it.
Yes.
Oh, well, thank you so much for joining us. And for our listeners, I will make sure to have Courtney's info in the show notes. And we'll also have it on our social media channels. We're on Facebook and Instagram, Nestology Podcast.
Thank you for joining us, where we help you make the best of your nest.
Bye.
Bye.